All right, guys. So today is Sunday, 22nd of February, 2026. So we are actually going to analyze the market to yeah, we are actually going to analyze the market to have our bias for the coming week. All right. So as you can see the screens, okay, this is 1 month monthly time frame. Okay, this is monthly time frame, and it is actually clear that the price has been bullish since what the price has been bullish since um 20 20 January, on the 2nd of January 2020, okay, 2020, the price has been bullish, right? From the monthly time frame, it is clear you cannot even see a rejection or retracement from 2000, from where the price was 2000, okay? So, yeah, so as a swing trader or as a position trader, all you have to be looking out for is what buys, okay? You go according to the trend, right? Let's check the weekly time frame to see what is actually going on in the weekly time frame, right? So this is the weekly time frame. From the weekly time frame, you can see that the price is bullish as well, right? The price is bullish, creating higher highs and higher lows, all right? But looking at this last zone, you can see the market has actually given us a rejection, okay? From the last 4 weeks, okay, the market gave us a rejection here, okay? Pulled down to this level and gave us this rejection. So basically, there has been what? Rejection within this zone, okay? Yeah. And so last week, let's look at last week candle. This is actually last week candle. This is last week candle. Okay. Last week candle actually ended very, very positive. Okay. It ended very positive, which is a very good sign. We can actually classify this candle as dragonfly doji, all right, with this move. Okay. But we cannot conclude that the price the coming week is going to be bullish. All right. Because you see, from the previous week, the candle has not closed above the previous week. Okay. So the market is just closer to the previous week high. Okay. This is the previous week. The price is just closer to the previous week high, which we believe that the previous week high is what? A very strong resistance zone. All right. A very, very strong resistance zone. So this zone at the peak, market has not crossed it yet. Look at what happened here. Look at what happened here. From here, you can see last week candle, when it got to the previous week low, because of the support, the strong support around the zone, it rejected the price. Okay, it rejected the price and pushed it all the way to the upside. Okay, it rejected the price at this zone, rejected it at this zone, and pushed it all the way to this level. Okay, push it all the way to this level. Now, what you need to understand is that when you come to the higher time frame, the swing high of the candle and the swing low of the candle are support and resistance, whether we like it or not. Okay, so you can see from the swing low of the previous candle, okay, which is the second week of this month, okay, the previous low, when this last week candle got to the previous low, it got rejected, right? It got rejected at this zone, all right? So now it has gotten to the previous week high, okay, gotten to the previous week high, which we believe that zone should be a very strong support zone. Okay, so we cannot actually conclude our decision based on the weekly time frame. So we are going to drop down to the daily time frame. All right, let's drop down to the daily time frame to see what actually happened there. The daily time frame, we go to the daily time frame. Yeah, so basically this is the daily time frame. All right, the daily time frame. So daily time frame, like I said, okay, this is the weekly high, okay, the previous week high and the previous week low. The market got to the previous week high and got rejected. Previous week, the market got to the previous week low and got rejected at this zone. Okay, got rejected. All right. Now the market has gotten to the previous week high. All right. From this zone, you can see there is resistance here. There is another resistance at this zone. This resistance as well. So the market, okay, has a higher probability of pushing the price, rejecting the price at this zone because this zone is a strong resistance. Okay, it has a higher probability to reject the price at this zone. Okay, the previous week high, because it has rejected it at the previous week low, which is this level. Okay, yeah. So what we need to do now is to wait for what the market will be, how the market will behave around the previous week low. Okay, but let's check liquidities as well. It's very much important to check liquidity. To check liquidities, all right. From here, all right. So we found this liquidity here on the daily time frame. This is a liquidity. Market refused to take this liquidity, right? Which is very, very far. The market refused to take the liquidity. Okay, daily liquidity. We have daily liquidity. Daily liquidity. Okay. Let me put this symbol there. This is our daily liquidity, which is at the price of 4,277. The market refused to come back to take it. Right? So we're gonna leave it there. So on the one day time frame or on the daily time frame, the market is in between the previous week high and the previous week low. Now the price has gotten to the previous week high, which has a higher probability of rejecting the price, because that zone is a very strong resistance zone. So let's descend down to the 4-hour time frame. Okay, we go down to the 4-hour time frame to mark our support and resistance zones. Okay, and check liquidities as well at that zone. So look at this. This is the 4-hour time frame. And if you check the 4-hour time frame clearly, check where the market has gotten to. The price has gotten to $5,108. Okay, $108, which is the previous week high. Okay, the previous week high. So check where the market has gotten to. If you check to the extreme left, you have this rejection. Okay, there you have this rejection here, this rejection here, and this rejection here. So this is actually a very strong resistance zone, a very strong resistance zone. And I doubt if the price is going to break it out, okay, and push up. All right, but fundamentals and then geopolitical situations or issues can cause the price to push up, because of, you know, this week on the 21st of this month, Trump said he is going to actually add 15% tariffs to all nations. Okay, so that news actually has the ability to break this strong resistance here. Other than that, it is very, very hard. It will be very, very hard for the price to break this zone. Okay, so in this situation, we should be expecting some rejection if there is no geopolitical. We should be expecting rejection from this zone to this level possibly. Okay, but let's check something here. Okay, let's look at liquidity. This is 4-hour time frame. This is 4-hour time frame. So we need to spot the liquidity behind. Okay, we need to spot the liquidity behind and the possibility of the price, the retracement of the market. Okay, so let's check. Where did the market started? The momentum started from. Okay, so the market started the impulsive move from this zone. The impulsive move started from this zone. All the way to this level. Okay, now what we need to look out for is liquidities. Okay, so this was our first break of structure. This was our first break of structure right here. Okay, after this break of structure, the next swing low that tapped into the break of structure zone was this. Okay, forming our liquidity. So this is the liquidity right here, which the price left it behind. Okay, this liquidity was left behind. The price actually didn't take the liquidity out. Okay, so we have this liquidity left behind. All right, what is the next break of structure? This is the next break of structure. Okay, this is the next break of structure. Okay, the next swing low that tapped into the break of structure zone was this, forming this liquidity, but the price came down to take the liquidity out. So this liquidity is out. Okay, this liquidity is actually out. Okay, where is the next break of structure? This is the next break of structure right here. Okay, so the next swing low that tap into the break of structure zone to form our liquidity is this swing low. Okay, after break of structure, swing low to this level, creating our liquidity. So this liquidity was created. Okay, and the price, as you can see, the price took the liquidity out. So this liquidity has been taken out. All right, so along the line, according to the 4-hour time frame, the liquidity around this zone has been taken out. Okay, so for me, I think this liquidity is going to be left behind. Price is not going to come here because of what is happening. Okay, geopolitical issues. Okay, I doubt the price can push all the way down to come to this level. If there had been this liquidity left behind, I think the institutions could have pushed the price to this level. But the strength of this geopolitical issues is more than the institutions. All right. Now, what next? What do we have to do? Since there's rejection here, the 4-hour time frame, this rejection has got this supply zone, and this supply zone is very strong, which I believe that is going to cause a little retracement to the downside like this. Okay, so we have to descend into the lower time frame, like 1-hour time frame, to check the liquidity closer to this zone. Okay, we have to check the liquidity closer to the zone. After we identify those liquidity, then we can actually guess or anticipate where the market can retrace down to. All right, so we are going to descend into the lower time frame, 1-hour time frame, to check what can actually happen. All right. So this is the 1 hour time frame. You are down the 1 hour time frame. All right. Okay. So this is 1 hour time frame, right? And as you can see, like I said, bro, like I said, the price, we have rejection here all the way, rejection, 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 rejection. Okay, this zone is a rejection. So basically, this is a very strong support resistance zone. Okay, this is a very strong resistance zone, and the price cannot ignore it unless the geopolitical issues has a higher force, because there's, like I told you before, 15% tariffs on all nations, so that has a higher ability to push the price up. All right, now due to this support zone, resistance zone, sorry, we have to look out for liquidity below in order for us to actually guess or anticipate the retracement of the market. Okay, so from here, 1 hour time frame, we don't have, from the 1 hour time frame, we don't have any. Where did the market started the impulsive move? From the 1 hour time frame, okay, okay. So the market has basically taken liquidity from this zone. Okay, the market has taken liquidity from this zone from after this break of structure. So after this break of structure, swing low, tap into a break of structure zone is this. So this is the liquidity. So basically, this liquidity has been taken. All right, this liquidity has been taken. So this is the standard break of structure as well. This is the next break of structure here. Where the next swing low that tap into the break of structure zone. This, okay. This is the next swing low that tap into the break of structure zone. So this liquidity has also been not taken. This is the swing low. Okay. This. So this is the swing low that tap into a break of structure zone. So this liquidity has been taken by this swing low. All right. So below this side, no liquidity found. All right. So we need to start from where the market started the impulsive move again. Okay. So from here, the market has started an impulsive move. Okay. There, the market started another run. Okay, in the 1 hour time frame. So a first break of structure happened here. This is the first break of structure from this run. Okay, this run to the outside. Okay. All right. Now, break of structure happened. This is the swing low that happened to the break of structure zone. Okay, this is the swing low that has tapped into the break of structure zone, thereby creating our liquidity that we need. Okay, the swing low that has tapped into the break of structure zone is this. All right. So currently, I'm expecting the price to come back to take this liquidity. This is our liquidity now. This liquidity has not been taken. The liquidity is still lying down there. Okay, and where should our point of interest be? This is an imbalance from this zone. Okay, we have this imbalance here. You have this imbalance and sorry, we have this imbalance here. Okay, this imbalance here. This is the imbalance after this liquidity. All right, which we know that the market should be balanced. Right, the market should be balanced. Anytime there's imbalance in the market, it means the market is not complete. Okay, it's not in its normal form. So this imbalance should be actually balanced. Okay, so I believe this liquidity is going to be taken out by this retracement to the downside. Okay, fill this imbalance. Okay, possibly mitigate this order block, and then push up to give us a new high. This is what I believe from the monthly time frame to the hour time frame. Okay, yeah. So when the market opens, we should expect a retracement. Okay, we should expect a retracement under normal market condition. Okay, under normal market condition, this is what we should be expecting. All right, but I repeat, because of the tariffs imposed, all right, the tariffs issue, price can actually push up, retest this one, and push and give us all-time high. All right, yeah, that is it. So let's see what is going to happen. This analysis is basically from the monthly time frame, daily time frame, 4-hour time frame to 1 hour time frame. All right, so I'm actually expecting the price to retrace a little bit, mitigate our or take liquidity out. Okay, mitigate or fill the imbalance and then push up to the upside.